The E-mini rallied strongly over the past couple of days, but we had those 5 bear days, and that's a problem for the bulls. They need to break strongly above at least Tuesday's high to make traders believe that the bull trend is still intact. We're testing the top of this 3-week trading range. We had a breakout that was not all that strong. We reversed back in it, and we're trying to break out again. We don't yet know if this is simply a buy vacuum test of resistance up there. If we stall here and turn down, this becomes a head and shoulders top bear flag, left shoulder, head, right shoulder. I think it's probably easier to see on a lower time frame chart, 60-minute chart. So left shoulder, head, right shoulder. We're getting lower highs and not yet lower lows, but if this left shoulder, head, right shoulder breaks below this neckline, the double bottom, then all of a sudden we get lower lows. The odds still favor the bulls, but not by much. We would not be going sideways if the bulls were strongly in control. The past 5 weeks all have been small bars, and every week reverses the prior week. Therefore, no one is clearly in control. Last week was a sell signal bar for a triangle, a bad looking sell signal bar, and there were buyers below. And this week, if it closes around here, will be a buy signal for a failed breakout below the triangle. However, it probably will have a small body and be a weak buy signal bar. And the market probably will wait for next Wednesday's FOMC meeting to decide whether or not we're going to break out of this 5-week pattern. Monthly chart. Monday is the last day of the month. The bulls want the month to close on its high. The 2 prior months had prominent tails. So far, this month has a prominent tail. If the month closes on its high, it would be a buy signal bar for May, when May starts on Tuesday next week. We had a buy climax day yesterday, and usually buy climaxes transition into trading ranges. You can say the buy climax ended here and the trading range began here. A lot of times the next stage in the market cycle begins before the current stage ends. So the market was sideways for 3 hours yesterday, but the bull trend actually ended here. The bears want a double top. You can see we just went above last week's high, and we're testing the open of the week, that blue line right there. That's important because on the weekly chart, if we close above that blue line on the 5-minute chart, the weekly chart will have a bull body, and it will close above the weekly moving average, which is bullish. And if it closes below, then it has a bear body. However, a small bull body or small bear body is really not major. It's not a major sign of anything. More important is the small body, and that's a sign that the market is neutral. We had a doji bar with a tail on top last week. So far this week is the doji bar with a tail below. Chances are the week will end pretty much like it looks right now, which means probably the week will end not far from the current price. On the weekly chart, 10 points is not all that much. So even if we were to close up 10 points, the weekly chart would have a bull body, but not a very big bull body. So a 10-point rally today will not mean all that much. On the other hand, if we have another day like yesterday and we close way up here, that would be a sign that the bull trend is resuming. I think probably with Wednesday's FOMC meeting being important, today, Monday and Tuesday will probably be neutral. We had a reversal up at the end of yesterday, and we're always in long, but we're at resistance. You can see we traded above yesterday's high, and then we pulled back. This is a micro double top. We went up on 79, down on 80, up on 81, and we're turning down again. On a smaller time frame chart, it's probably a micro wedge. Room to the moving average. So probably a little bit lower. The bears want a higher high, major trend reversal. Bull trend, bear breakout, higher high. But not a good sell signal bar. And the rally is only 4 bars, well, 5 or 6 bars. More likely, we'll find support around the moving average and a 50% pullback. Also, this breakout point, 75 high. First bar, doji, sideways for a couple of hours at the top of the range. So it looks like a trading range open. Doji here, doji here. The bulls want a high one buy signal. So bull breakout of a bull flag and a pullback. And then they want a continuation up through resistance. But this does not look like we're going to break through this resistance right now. Looks like we're pulling back. The bears have a double top. They want to break below the neckline and fall for a measured move down. Globex chart, sideways all night, trying to reverse down from a breakout above the top. In the buy zone, 50% pullback from yesterday's closing rally and at the moving average. In the middle of a 3-hour trading range. Probably not a very good buy above 2 at the top of the range, and a micro double top up here and a bigger double top up here. If the bulls can go sideways here for 3 or 4 or 5 bars and form some kind of a base, something like this, then they would have a better chance of getting the bull breakout. The market at the end of yesterday told us that today probably will continue this kind of trading. When you have a big bear bar like that, it's something of a surprise in a bull trend. And usually the bulls need a micro double bottom, like big bear bar yesterday, micro double bottom, big bear bar. Here, a couple of bear bars went straight up, 1 bear bar straight up. Tail on the bottom of 1, or 1 a doji, tail on the bottom of 2, and we're in the middle of a 3-hour trading range. Bulls bought the 1 low. We'll probably bounce above the 1 low sometime in the first 4 or 5 bars, and the limit order bulls will probably make money. This looks like a limit order type of open. Doji 80, doji bar 1, tail on 2, 50% pullback. The bulls want an opening reversal up from support, like yesterday. Yesterday we had a small gap up, and the bears twice tried to sell off and close the gap. Instead, the bulls reversed up from support, and here the bears tried to get a reversal and reversing up from the moving average. 2, not a good buy signal bar, but you can see the bulls who bought below 1 made money. So possibly a limit order market. No rush to do anything right now. Big bar 3, so buying above it has bigger risk, has a tail, and we're at the top of a trading range, so the probability is less as well. So it's a low probability buy. better to wait for a strong breakout above all of this resistance and then buy, or wait for some kind of a double bottom and then buy. Limit order bears selling 1 point above 1, above 2, made money. For the bears, a second failed breakout, yesterday's high. This would be a higher probability sell than selling below 1, but it's still not all that great because of all the reversals, up and down and up and down. Tight trading range, in a bigger trading range, being forced to sell in the bottom half of this range and the middle of that range. Location, not good for the bears. Big tail on the bottom of the bar. Probability, not good. Risk, big. So still always in long. Have not traded below a bear bar today, even though 2 of the first 4 bars have bear bodies. So more limit order trading. Buyers below 4. It could be the high of the day. Second failed breakout yesterday's high. But I think the bears are better off selling below a bear bar that closes near its low. Limit order traders buying below bars, 1 point below, 2 points below, selling above bars. Bulls want a high 2 buy, a 2-legged pullback from yesterday's reversal up into the close. Big bars make the risk big, and the reversals make the probability of a breakout up or down small. So limit order trading. Traders are betting against breakouts. Can you sell on a stop below 77, the neckline of the double top? Well, look at all of these bars with prominent tails. Not a good stop order environment. High 2 bull flag, but bear bar, so not a very strong looking buy. If 7 closes on as high, possibly a buy, but with the 2 big bear bars and all the reversals, everything is less certain. For the bulls, it's still a bull flag. So bull breakout, bull flag. You can call it a wedge. We went up and down on 80, and then down on 2, down on 6. This kind of thing happens all the time, where the market is deciding whether this is a bull flag that will lead to resumption of the bull trend that began here, or is it a reversal? It's still slightly more likely a bull flag. Those 2 bear bars, 5 and 6, good-sized bear bodies, that they make traders hesitant to buy above 7. Limit order bulls who bought below 4 just made their money. Most traders should just be waiting. Big bars and big reversals usually will not be the start of a trend. Usually the bars have to get smaller. But, if we start to get 2 or 3 big bull bars closing on their highs, traders will buy at the market. Similarly, if we get 2 or 3 big bear bars closing on the lows, even without a good sell signal bar, traders will sell at the market. Right now, this is just limit order trading. Most traders should not do it. I've been trading 1-minute reversals. Second entry, buy, wedge top, wedge bottom, 1, 2, 3, and then wedge top, 1, 2, 3. Limit order traders. Every limit order trade has been profitable today. Buying below 1, below 4, below 8, selling above 2, selling above 6. For the bulls, this is a bull flag. This is a breakout on 7, and 9 is a pullback from that breakout. For the bears, they have a double top, a bear breakout on 6, and a pullback on 8. I'm pretty much neutral. We're still above the 79 low, so you could say it's a little bit more bullish, but it's really not. It's pretty much neutral. You can go to triangle, lower highs, higher lows. Stop order traders want to get a signal bar that's not too big, and 11 is already becoming a little bit bigger than traders want. They either want a bull bar closing on its high just above the moving average, or a bear bar closing on its low with the close just below the moving average. I think we're still always in long. We're still above the bottom of the buy climax. Getting near the end of the first hour, and we've rallied for about a day and a half, and we're going sideways here. This is the daily moving average, the 20-day moving average. And that red line is the top of this trading range. We broke above it, we fell back below it, we're testing it. Resistance, the bears want a head and shoulders top, left shoulder, head, right shoulder, and the bulls want to break back above it. Still more than a minute remaining in the bar. We could still close on its high. As I said, it's probably a couple ticks bigger than what the bulls want. However, a lot of times when you get a swing that begins in the first hour, the signal bar, there's something wrong with it. It's not quite as good as you want. But that's what you have to deal with. Yesterday bar 5, fairly conspicuous tail, but that was the low of the day. Here, after 2 big bull bars, that was the high of the day. Here, outside down, after a strong rally, that was the high. This was a pretty good buy over here. 1 pullback 2. But most of the time, it's not going to be as good as traders want. So you just take it and take your chances. Usually by this point, either the bulls or the bears have had at least one decent stop order bar. And when that happens, it increases the chances that they'll get a second or a third and that the trend will go their way. Okay, so there's a bear bar closing on its low, but at the bottom of the tight trading range. I think not a strong sell. Getting near the end of the first hour, so bar 12 affects the appearance of the first hour. And right now it looks like it might become outside down. We went above the last hour's high and we're getting near the last hour's low. This was the high of the last hour. Actually, is that right? No, 81. No, this is the high of the last hour. So in any case, we went above it and may go all the way below it. For the bulls, this will be a wedge, 2, 6, and 12, but they'd like to get a decent bull body, 2, 3, 4 tick bull body closing on its high. Bear breakdown, close below 6. That's the end of the first hour. We should probably have to get below the low of 12 because the 60-minute bar is a bear bar closing on its low, a microdouble top at resistance. So the market wants to see what's below. Sideways for 4 bars, probably not going to go much more down, but it's definitely a sell setup on the 60-minute chart. That's enough, I think, to make it always in short. Weekly chart, the bears want the week to close below last week's low. Last week was a sell signal bar, and this week is the entry bar. It's a terrible entry bar for the bears. But at a minimum, they'd like it to close below last week's low. Traders are selling at the market, right? Either scalping or swing trading. Support just below 60-minute moving average, low of last week. The bears are hoping that this double top leads to a measured move down. Right now, I think it probably will not, but it might. Takes us all the way down to the bottom of yesterday's channel. Probably at least a small second leg down. 3 big bear bars, assuming that 13 closes, near its low. And that means probably the first reversal up traders will sell. Bigger bar, so climactic might get a pullback, but odds are we'll come back to the 13 close even if we bounce 2 or 3 points here. 1 minute bears got their scalp, selling the high of the prior bar and scalping out 1 point. Can you buy, betting that we'll get back above the 77 low? We probably will, but I think it's better to be selling right now. Sell the close, so at some point you get a disappointment bar. Sell the close, disappointment bar. Bears sell more higher and then get out around the 3 close, and bulls buy around the 3 close, and if the bulls are strong enough, they can create a reversal. Will the bulls buy above 14 for a failed breakout? I would not. I'd prefer to get a second entry buy. Sometimes you get a sell climax on the open and it immediately reverses up, but I think it's usually better to take a micro double bottom or wait until you get 2 or 3 big bull bars and then start to look to buy. You can see we're right above last week's low, so the market's paying attention to it. Still solid close, but we're right at support, and we've had 4 decent bear bars, so probably better to wait to sell a bounce. Sell climax on the open, and there was no double bottom. It went straight up. You can call this a high or low double bottom. This is similar to today. A lot of trading range trading here, and 3 bear bars fell below support and reversed straight up. Good looking bull bar. Do not have that today. Here, 6 or 7 bear bars and went straight up. Choppy. It took several attempts to get a bottom. Again, choppy. Several attempts to get a bottom. And this is choppy as well. Will we get all the way back up to the open and form a reversal day? I don't know. But this early trading range trading reduces the chances that today is going to be a big bear trend day. So if it's a bear trend day, it probably will be a weaker bear trend day, like a trending trading range day. Upper range, breakout, lower range. Always in bears, I would get out above a bull bar 15 if it closes anywhere near its high. And aggressive bulls could buy for a possible low of the day. A big high 2 bull flag, leg 1, pullback, leg 2. But with the 4 bear bars and the tail 14, higher probability to wait for a better bottom or wait for a strong reversal up. Several attempts down. I'm viewing this open as a sell climax. Not anything, not anywhere near as strong as these sell climaxes, but still a sell climax type open. And sometimes you need a couple legs down before you get a reversal. So I think we're going to get a reversal. It's just betting that this is the reversal is not a high probability bet yet. First, the bulls need to get above the neckline of the double top, the 77 low, which they probably will. The limit order bulls above that low, or more 2 points lower, 3 points lower, will probably make money. This is the neckline of the double top. So far, not as strong a bar as, well, here, bar closing on its high, higher probability of going higher. Closing on its high here, closing on its high. We've got a reversal all the way back up to the open of the day. All of that early trading range trading increases the chances of a reversal today. Bears theoretically have to sell again below a bear bar. I would need a pretty good bear bar. 14 is a pause bar, tails top and bottom. 15 is an outside up bar, not very big. And we're, I think, just above important support. Last week's low in the 60-minute moving average. And then look at the 60-minute chart. Does this look like it's about to become a bear trend? No. Usually when you get a strong rally, it has to go sideways for more bars before you can get a big sell-off. Low one short, but a doji bar, and I think not a high probability short. Solid close bears might buy back their shorts around the 14 close, disappointed 15. Bulls try and get a second entry buy, micro double bottom. What do the always in bears do if they get out above 14, above 15? I think 16 is not a great short, so they might be trapped out. They did not have to get out above 15 because it's not a very good buy. Three bars with prominent tails, so starting to form a trading range, still always in short. Back below last week's low. If the bulls get a good bull bar 18, this would be a higher probability buy. The market often tries to reverse around bar 18. But for the bulls to buy above 18, they need a pretty good bull bar. If 18 is a bull bar with a 2 or 3 tick bull body, I think the bears will get out if they did not get out above 15. And bulls will probably buy, but it's more likely we'll end up in a trading range than in a bull trend. We'll probably have to go sideways more to create a better bottom before we reverse up. But I would get out of longs if it looks like this. It's a reasonable buy. For the bulls, it's a second entry for the failed breakout below 77, the neckline of the double top. And it's a reversal up from support, last week's low and the 60-minute moving average. Tight channel, first reversal minor, so unlikely to go straight up. More likely will bounce, maybe double top around 16, maybe the 6 low, the moving average, and then pull back. Now I've been showing you these reversals because I think that's what's likely today. This is less likely, but even this was a minor reversal, and the bulls needed a pullback to a higher low. Same here. I would think of this as a strong minor reversal, and this is the major reversal, but it did not lead to a bull trend. Anyone taking the buy, their stop is down here. And as I said, I think if it triggers, and it probably will, I don't think it's going to go straight up. I think We had a lot of confusion here. We'll probably get confusion here as well. Not quite always in long yet. If 19 is a big bull bar closing on its high, then it's always in long. Bar 18, right? If it breaks out of the 18 bar range, 90% chance it will not break out of the other side. Very common if the market sells off for it to reverse up around bar 18. If you bought, reasonable to take partial profits at 2 points. Will the bears sell the moving average? I would not. I would wait to see how this bar closes, because this had potential to be a reversal day, and if the bar closes on its high, the odds are it will be a reversal day. Limit order bulls who bought the 6 low. Well, first of all, the limit order bulls who bought the 77 low made money, and the bulls who bought the 6 low were back above it, so they made money as well. So holding long, even during a strong sell-off like this, the bulls made money. That reduces the bearishness of the sell-off. Now, we had a lot of confusion here and then some here. You have to assume there's going to be something wrong with 19. For example, a big tail on top. The bears double top 16, but we rallied far enough up so that the bears will need a second entry short. Most bears will not short below 19 or 20. Upper range, breakout, lower range, and we've already gone back into the upper range. Limit order bears sold 16 high and sold higher. They sold the moving average. They're trying to get down below the 16 high, and it's important if they do, because it reduces the chances of a strong bull trend. You have to assume limit order traders are going to make money all day long, selling above anything, buying below anything, because this was telling us that limit order traders are doing well. You can see the bears who sold 16 high and higher made money. I think we're always in long, but this does not look very bullish. It looks like we may be forming a lower trading range. Let's say 20 is a bear bar. Unless it's a very, very big bear bar closing on its low, most traders will not sell below 20. For the bulls, they have a double bottom 15, 18, and therefore they'll look for a measured move up. Takes us back near the open. We have a lot of time to get there. We don't have to go straight there. We could pull back here, form a trading range, and then go up there, 2 hours from now. Bears double top 16, but the reversal up is too strong and the buy signal bar is too good. So most bears will not sell below 20. You have bears that sold the 18 high, although I think that's not a good trade. Since limit order traders have been making money doing everything today, I suspect we're going to pull back below the 18 high, and the bears that sold the 18 high will make money. A lot of times the market will pull back to the top of the buy signal bar. Still always in long, but bulls are being forced to buy higher than they want, and at resistance, the moving average and the 6 low. Stop for the bulls below 18. The bears still want a double top 16 and 19, but with the 3 bull bars and the good context, the reversal up from support, and a pullback in a strong rally, it's a low probability short. Might be a trending trading range day, upper range and then lower range. Looks like bulls scalping. For the bears, wedge 16, 19, but I think not a good stop entry short. Stop for the bulls is all the way down here. and we could easily get a very deep pullback. When you have a tight bear channel and a strong reversal up, it's still a minor reversal, and the bulls often need a major reversal, which means a sell-off and a higher low, for example. They always in bulls do with 21. If it closes on its low, it's okay to get out, but I think we're always in long, and I think there'll be buyers below 21. Traders becoming resistant to buying. Big tail 19, 20 close below the moving average, 21 tail on top, wedge with 16, 19. Market's deciding if it's going to pull back and then go up, or if it's going to keep going up. Well, it's okay to get out below 22. It's also okay to hold, stop below 18. We have a wedge, and we've had lots and lots of reversals today. And we could easily come down to last week's low, the 18 high. So if you're willing to hold through a potential deep pullback, it's okay to stay long. And for the bears, you can argue double top 16. I would not be selling at the stop. If we get a second entry stop, maybe sell. We're not as strongly bullish as this reversal day. It's more like this, so we'll probably get some kind of a pullback, but we've probably seen the low of the day. Again, this is stronger than today as well. Reversal days. Trying to find something that is comparable to today. This might be kind of like what we'll do. Now, again, I don't know, this looks much more climactic and overdone, but maybe something like that. So I'm expecting some hesitation here, but I also think we've seen the low of the day. Market's deciding whether this is going to be a lower trading range in a trending trading range day, or if this is the low of the day and we're having a reversal day. Right now, I think 70% chance 18 will remain the low of the day, but we might test the 18 high. If we get a bear IOI with 24 closing on its low, again, it's okay to get out of longs just in case we get a deep pullback, but I think we're still always in long. For the bulls, it's an IOI bull flag. We're always in long, but tails 19, 21, 22, bear bar 22, increased risk of a pullback pretty soon. Wedge 19, 21, 24. We're at the end of the second hour, and the bulls are trying to create a buy signal bar. Remember, I said there would probably be buyers below last hour's low, even though it was a micro double top and a bear bar closing on its low. With this many bull bars, like 8 or 10 bull bars, unlikely to go into a bear trend without going sideways more. Since the hour is going to close near its high, this is bar 24. We're probably going above the bar 24 high early in the third hour. So 25 or 26 will probably go at least a tick above 24. Bulls have a breakout. Okay, there's the end of the hour. We probably have to get above the 24 high, not because of bar 24, but because of this, the 60-minute chart. We now have a decent buy signal bar and a bull trend, 2 legs down, 1 pullback, 2 at the 60-minute moving average for the decent buy signal bar. So the market probably has to get above the last hour's high sometime this hour, probably early this hour, which means probably within the next few bars. The bears want a wedge, 1921. But even if we sell off, probably buyers below, and we'll probably go above this hour's high, last hour's high, sometime in the current hour. So sometime before bar 36, we're probably going above bar 24. Low probability sell. You can argue wedge, 16 and 21. Decent bear bar. Probably sellers above 25. It's a weak rally. And but probably buyers either at the below 25 or not far below. %50 pullback is here at the 16 high. For the bulls, a high 1, always in the low. Probably have to get above the 24 high because of a good buy signal bar on the 60-minute chart. But I suspect that we're not going much higher. That we'll either pull back here below 25 or after going above 25, even though we're still always in long. I think right now it looks like we're going above 25 within the next 2 or 3 bars, but I suspect sellers above and we'll start to pull back and start to form a trading range, maybe down to the 23 low. Still always in long. Might come down to the 77 low, the 18 high. Surprise bar, so we'll probably get a couple legs sideways to down. Bulls are hoping that this is like yesterday. 25 kept going up, 40 kept going up. What's different here is there I thought we were in a bull trend. Here I think we're in a trading range and we have a lower high. But remember I said that always when bulls get out below 25, it's reasonable for them to get out below 25. I have to buy again above a bull bar. The bulls are going to try to get a buy signal bar 28. I think they need a pretty good buy signal bar. I think 27 is a give up bar. When you get these give up bars, sometimes the bounce will be big. Sometimes it goes all the way up to that 27 high before you get your second leg down. But we're probably going to get a second leg down. Here, we got a bear trend. I don't think we're going to get that. But we might get this. A pullback, second leg down. A lot of times the bar after the bear bar is a big bull bar, and you get a couple legs up before you get your second leg down. Here, we bounced all the way to the top of the bar. Actually, it looks like we went a little bit above the top of the bar and then got the second leg down. Bear bar, a couple legs down, 2 or 3 legs down. Bear bar, tried to reverse up, tried to get this to be a bear trap, but we still got a couple legs sideways. Bulls trying hard to get a bull bar 28, but even if they get a good looking bull bar, we're probably going a little bit lower. Or at least we'll go sideways. Yesterday, we had 2 legs down, 1 pullback 2. Today, 1 pullback 2. And yesterday we continued up, but we were above the moving average. Now we're below the moving average. Also yesterday, it was in a bull trend. And today we're in either a trading range or a bear trend. So lower probability buy today above 28. Now the always in bulls theoretically have to buy again above a bull bar. So theoretically they buy again above 28 if it closes near its high. but odds are, instead of going straight up, there'll be sellers above and we'll go sideways in the middle of what will end up as a trading range day. For the bulls, head and shoulders, bottom, bull flag, left shoulder, head, right shoulder. But weak rally, good sell-off initially, so good selling pressure here. Bulls did not make a strong enough bull reversal here. And now, again, the bears are strong. So lots of confusion, sideways more likely than up. Not a strong buy signal bar. Increases the chances that we're going to get a second leg sideways to down and that there'll be sellers above 28. What about the chances of this just collapsing? Sometimes when you get a give up bar, you get a big bear trend. Give up bar, bear follow through. We do not have a bear follow through bar. We have a bull follow through bar. Like today, a doji bar, we got some kind of a pullback, second leg down, second, third, fourth leg down, right? We do not have this. We do not have 5 or 6 consecutive bear bars. We do not have this. And we do not have this, a bull flag bear breakout. Probably sellers above 28 and buyers not far below, maybe down to the 18 low or so. Does 29 qualify for a second leg down? 27 was a big enough surprise. Odds were we'd get a second leg down. It's possible 29 is the second leg down. We have a wedge bull flag, 23, 27, 29. But I suspect that we'll get a lower high and we'll enter a trading range here. So sometimes the second leg down is not so obvious. You know, is this the second leg down or is this the second leg down? Is this the second leg down or is this the second leg down? Similar to today, is this the second leg down or are we going to get more? I think we're going to get more. So leg 1, pullback leg 2, maybe. Or maybe this whole thing is the first leg and this is the second and this is the third. So I suspect that this is what we're doing right now, that we're getting a lower high and we're going to get one more push down. Always in bulls, a problem, right? It's still always in long, and therefore, if they're trading always in, they have to buy again above a bull bar, which would be bar 30. Even though the probability is we're not going to go straight up. This is going to get confusing. We were up, we were down, we're up, we're down, trying to go up, right? And confusion usually results in sideways trading. Also, what exactly did we test 29 low? Did we test the 18 high? Not really. We missed it by 3 ticks. So if the market wants to test the 18 high, we probably have to go lower. But our problem for the bulls, it's still always in long. We still will probably go above the high of the last hour, which is the 24 high. I think it's probably better to wait if you're trading always in instead of buying above 30. Limit order bulls above the 28 and 26 low made money. 60-minute chart, we still should get above that 60-minute high. You would assume this hour, but if not this hour, then next hour, then next hour. We might get some sellers around that 27 sell climax high. Always in long, so difficult to sell with limit orders here. You can see the bad setup, continuation of this kind of trading. So always in long, theoretically bulls buy above 30, I would not. Right now I'm trapped out. I know the odds are we're going above 24, but we may go sideways more before we get there. The common situation, we have a reversal and a bull flag and a breakout of the bull flag. And then you get a bad bar, follow through 32, and the bears wonder if the bull breakout 31 is failing. So is this a sell signal for a failed breakout, or are there buyers below 32 and 32 is just a pullback from a successful breakout? Confusion, right? Middle of a trading range day. We're in a triangle. We're getting lower highs and higher lows. Still always in long. So even if we do get down to the 30 low or even below 30 low, probably buyers. Still 70% chance 18 will remain the low of the day. We just don't know where the bottom of this pullback is. Not a good buy signal bar 30. That increases the chances that we have to test down to the 30 low, maybe even a little bit below. That bad buy signal bar 30, I think, makes traders hesitant. They think it's not a good buy. And that increases the chances that we're going to test down to the 30 low and maybe even below. Bulls have, they need a good bull bar 33 to erase the bear bar 32. You know, I think you're only taking that if you can use a wide stop below 18. For the bears, a double top, lower high, but really a limit order market. I think we have to come down to the 30 low area, maybe a little below, a little bit above, despite the buy signal bar on the 60-minute chart. You know, this just does not look all that strong. And we've had so many reversals today, you have to assume that whenever the market is high, it's going to go low. Those are the third hour triangle, lower highs, higher lows, double top, bulls want a double bottom bull flag. I think we did not have a good enough bottom 30, so I think we have to go lower. That might be as low as we go. Tight trading range, bad to do anything except enter with limit orders, use wide stops. Still always in long, so slightly more bullish than bearish. We now have 4 highs at the same price, so it's a ledge. Odds are two things. We're going to go above it, and we're going to pull back below the top of it. When you pull back, it can pull back on the very next bar or 5 or 10 bars later. And the pullback can be a reversal. So it can go above, pull back below, and then just keep going down. Then if you have 4 more bars with a high at the same price or a low at the same price, odds are maybe 70% chance you're going to go above it and that you're going to pull back below the top of the ledge. And you might reverse. Here we have a ledge top and a ledge bottom. So we went above and we pulled back below the top. We went below and we pulled back above the bottom. Ledge top went above the top, pulled back below. Ledge bottom went below and pulled back above the bottom. Ledge top reversed down, but we got back above it. It took a lot of bars to test the high. We never, at least during this day, we never went back below it. Ledge top went above it, pulled back below. In fact, even reversed down. Sometimes it takes a long time to get there. Ledge top went above it, pulled back. You know, here's a ledge top. 9 bars at the same price in this day. It took 9 days to get above it and to pull back below it. Ledge bottom went below it the next day and back above it here and again here. Well, that was the minimum that I thought we would get. That test down to around the 30 low. I don't know if we go below it. I think we probably will. Bulls trying to get a high 2 buy, double bottom 30, but surprise bar 37, probably going at least a little lower. Remember bar 27, I said we probably would get a couple legs down. It was possible that 29 was the second leg down, but that we may test up near the top of the sell climax, 27, and then later get a second leg down. And this looks like one of those later type of second legs down. What do the always in bulls do? I said I would not buy above 30 and not above 33 unless you can use a wide stop. 38, it's a different case. Now we've had the second leg down from 27. I still think we're going to go a little bit lower. And 37 is another surprise bar. And that also increases the chances of at least a small second leg down. So if you buy above 38, your stop is still probably below 18. Always in long, but it looks like we probably are going to get a little bit more down. I think we're going above the top of the ledge, right? But I'm not. I think if you take this buy, your stop is down here. This is not a strong buy, and we're getting so many reversals. It's finally going to get their breakout 60-minute chart. It's a high one with a good-looking bull bar at the 60-minute moving average. So we probably have to get above the high. 7-bar tight range might not get much above the high. Plus, we're at the top of a 3-week trading range, which was resistance. So this is the first part of the process. Go above the ledge. And then the second part is you pull back below the ledge. Could be in the next bar, could be 10 bars later. Broke above the ledge, immediately reversed. Broke below the ledge, reversed up about 10 bars later. I think we're still always in long. And whenever you have a trading range day and a reversal day like this, open of the day is always a magnet. And it's so I think we'll probably get there at some point today, maybe now. And in daily chart, you can see so far a doji day. In other words, the open and close are around the same price, and it probably will look that way at the end of the day. But before the end of the day, we may go above the open, we may go down, but we'll probably end up closing somewhere around the open. It's still possible we could close on the low of the day, and the day could be a bear day, or that we could close above all this resistance above, but not likely. Right from the first bar, a doji bar, that was telling us that today might have a lot of two-sided trading range day trading. We still have not gone above the high of that bull bar on the 60-minute chart. That's the 24 high. Odds are we're going above it to trigger the buy signal, a bull flag and a bull trend, right? So you get a bull trend and a pullback to the moving average with a good-looking bull bar. Odds are, 70% we're going to go at least one tick above that bar, which is the 24 high. Nobody wants to buy high. Nobody wants to sell low. Everyone's looking for reversals. 40 is similar to the rally to 21, and then the rally to 24, and the rally to 30. Right? If you get hesitation, the bears want a reversal, and the bulls are hoping that the reversal attempt is just going to be a bull flag. And since we're still always in long, which means we're more likely to go up than down, you have to assume a bad bar on 41, probably buyers below. That's the 60-minute buy signal, breaking above the 60-minute high from 2 hours ago. It's a triangle. I don't have it drawn in, and the bulls are hoping we get a resumption of the 2-day bull trend. Never clear, right? Strong enough breakout, probably second leg up, but it is a second leg, one pullback two, and therefore an increased chance of a second leg trap. Still always in long, but if 43 is a bear bar closing there is low, I think the bulls will get out because of the possible second leg trap. Breakout, a lot of trading range trading, and it fails. Bulls get out below a bear bar, certainly below a micro double top and a bear bar closing on its low, and bears will sell looking for a reversal. Another version of it. Trading range, strong second leg, and then it just stalls, second leg trap. Look to the left, we're still in the trading range, strong breakout, but reverses. For the bulls to get out, they want the bear bar to close near its low. So I think it's okay for the bulls to get out below 43 because of the possible second leg trap. For the bears shorting below 43, I would like a bigger bear body. The bulls will pull back in a breakout at the top of the trading range and a bear bar. 43, not a very good looking stop entry buy. You have to assume there'll be more sellers above 43 and 42 than buyers trying to get back above yesterday's high. What about this ledge? Well, the odds are we're going to dip below it at some point before the end of the day. Just like bar 24, the odds were we were going to get above it, and it took like 15 bars to get there. Still always in long. Not a good buy signal bar 44. Lots of limit order trading, so it might be more sellers than buyers here. Different ways to draw the measured move. We have a double bottom, we have a neckline. Then we also have a gap, 40 high and 44 low. If the bears get a bear bar 46, that would be a second entry short, just like 18 second entry buy, and just like bears get out, bulls buy 18, I would get out of longs below 45. I'm less eager to sell. Here we knew the odds were we were going to get a reversal. Here we're always in long, and this is going to probably stay the low of the day. So get out of longs, yes. As far as shorting, I'm not sure that it's worth it. 5 ticks below 42, limit order bears made money, which makes sense since it's been so much. There's been so much limit order trading today. We're so close to the open of the week, and it's an important price. Today's Friday. We have a few hours left to the day. I think we're going to get to the open before the end of the day. Either we'll get it here, or maybe we'll pull back into 11:30 and then test it later. Second entry short, but a doji bar. Do I still think we'll come down to the ledge? Well, 70% chance we're going to come down to the ledge, and I would say 60% chance we're going to get up to the open of the week by the end of the day. So maybe come down here, and then around 11:30 get a move up toward the open of the week. Sometimes when you have important support or resistance, like the open of the week, you do not get to it until the final half hour. I think it's okay to be out of longs. If you're holding long, your stop is below 38. We have an important magnet at the top of this ledge, so we may come all the way down a tick or two below that ledge and still be always in long. Bears should take partial profits here. We got one tick below the target, the top of the ledge. For the bulls, about a 50% pullback in the buy zone. But it's 2 legs up in a trading range day. So we could come all the way back down to these lows or even the 60-minute moving average. We have not broken out of the 18-bar range yet. Have not gone below the low of bar 18, have not gone above the high of the first 18 bars. But I still think always in long. What happens if 49 closes on its low? Computers will start thinking of it as always in short. We still have the open of the week magnet above. We tested it twice on the open today. Tested it again here. If we do not sell off too strongly, and if we start to go sideways here, I think the odds are we'll get up there by the end of the day. I would not take the buy with a stop at least. For the bulls, high 244, breakout test, top of the ledge, but 2 big bear bars look stronger than this doji, so probably sellers above. Limit order bulls might have bought the 46 low. They certainly bought the 44 low. So we may get up to 46 before we stall. I still think it's always in long, but difficult to buy when you have 5 bars without a bull body. The bulls have a wedge, and even if they get a bull body, they probably need a second entry buy because of the tight channel. Limit order bulls made money buying 52 low. It went up exactly 5 ticks, which it had to do for the bulls to get out with a 4-tick profit. Wedge now 49.52. The bulls have to be thinking about buying again. I would not buy above 49, and I would not buy above 52. I think if the bears did sell the second leg trap below 46 or 47, they should get out above 56 if it closes near its high. Fairly tight channel, so probably the first reversal will be minor. And therefore, the bulls will probably need a double bottom 5 or 10 bars from now. Bears trying to get below the bottom of the bull breakout. Probably a minor reversal. So most bulls who are buying are scalping, and not a great buy with a stop above 56. For the bulls, wedge bull flag around a 50% pullback and a test of the 38 buy signal bar high. For the bears, micro double top, bear channel, and then when I get down to the 38 low. Remember, the longer we take to rally and the deeper we fall, the less likely it is that we'll get back to the open of the week. I still think there's a 50-50 chance that we'll get there. There's still enough time, and we're not too far below, despite this 10-bar, 12-bar sell-off. Double top bear flag 53, but always in long, and we've seen this pattern countless times today. Bull breakout, pullback. The bears won, or this to be a reversal, and the bulls want it to be bull flag. Here, 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 here. I am currently flat. My last trade was buying the 53 low. I did not sell the 55 high, but it made sense to do it. And I did not buy the 56 high. So I'm flat. The market often starts a move at 11:30. The bears see this as a triangle bear flag or wedge bear flag from this bear trend. More likely it's a higher low, and we're going to go higher. I still think the market's always in long. The bulls, maybe they buy above 56, maybe above 57. And for the bears, if they're short, I'd get out above 57. Higher probability, you wait to see a breakout and then buy, looking for a test back up to the open of the week. We're running out of time, and it's fairly far above. At a minimum, the bulls want to get back to the open of the day and put a bull body on the bar on the daily chart, but they would really like to put a bull body on the weekly chart and get above the open of the week. And the bears want the opposite. They want it to stay anywhere below the open of the day so that it'll have a bear body on the daily and weekly charts. So much limit order trading. So you can see some bears sold 59 high, 1 point higher. So far they're trapped. It has not dipped back below the 59 high. Bulls hoping that this becomes a trend, but the odds are against much of a trend, up or down. Look at the screen. We've been reversing repeatedly. Well, the bears double top 50. What do you do if 62 is a bear inside bar closing on its low? You can either keep, if you're long, keep a stop below 61 or get out. And for the bears, it's a wedge, a failed breakout above a double top. A double top is 2 pushes up, 53, 57, and then we have a breakout, 61 for the third push. If it closes on its low, it's a reasonable swing short, but nothing is very high probability. Just look at the past 15 bars, right? The market is not clearly going up or down. And then the whole, here, past few hours, reversing every 2 or 3 bars. It's a lot easier to make money if the market trends, but some days are like this. They just keep reversing, and it's much easier to make money with limit orders. Bears who sold 1 point above 59 made money. Bulls hoping that we're channeling up and get a bull breakout above the wedge bear flag, and bears hope that we get a leg 1, leg 2 move down, leg 1 pull back, leg 2. It's slightly more bullish than bearish, but not much. Nothing is very high probability when the market is in a trading range day, especially in the middle of the range like this. The bulls who did not get out below 62 will probably get out if we get a second bear bar. And for the bears, it would be a second entry short with a wedge bear flag, so a higher probability short, but still not very good trading, long or short. Past 15 bars, very tight range, all limit order trading, selling above, buying below, and scalping. Not a good sell signal. You can see more limit order traders bought than stop order traders sold. It's still always in long. Maybe the bulls can put their stop below 55, maybe below 65. And for the bears, they do not have a compelling short below 62 or 64. If it goes above, let's say 66 is a bull inside bar, I would get out of shorts. I would personally be out of shorts regardless. For example, above 63 and 64 is not a good enough bar to take a short when the market's always in long. So I would be out of shorts. Longs, I'm currently flat and willing to buy or sell. If 66 closes on its high and it's an inside bar, it would be another buy attempt. We're getting into the final hour. It's still a little early for a trend to last to the end of the day. If the day is a strong trend day, today is not. If a day is a strong trend day, you can have a very quiet day for several hours in the middle of the day, and then a trend could start at 11 o'clock, and make it all the way to the end of the day. When the day is not a strong trend day, and especially when it's a very tight trading range day like this, usually if you're going to get a sustained trend, it starts around 12:30, 12:35. And anything that starts before then probably is not going to last. Did not go over a bull bar 66, and it did not go above 61, so theoretically the bears could still be short from below 62. I think best choice in the market is in a tight range and reversing every 1 or 2 bars. Best choice is usually flat or trade with limit orders. Good looking bar for the bulls. It's a little bit late in the day for a bull trap. Normally if you get a trap, it occurs more around 11 o'clock or 11:30. Getting back to the open of the day, and the bulls want to get all the way back to the open of the week. I did buy this as it was forming. Because of the trading range, I'm always going to try to scalp at least part, and if it stalls, just scalp out all. Bears want another second leg trap, so first leg and then sideways and then second leg. Double top, lower high 46, still a triangle, lower highs, higher lows. Test of the open of the day. I think always in bulls will get out below 68 if it closes near its low. The bulls got their minimum objective. They tested the open of the day. After it tests the open of the day, it can do anything. It can stay sideways. It can reverse down to the low of the day. It can rally up to the high of the day. I still think there's better than a 50-50 chance we're going up to the open of the week. Sometimes you get these end of the day bear traps and bull traps, and they look really bullish, and then the market just reverses. Usually, well, they can occur in any kind of environment. Here's in a trading range, strong breakout, trapping bulls into thinking we're getting maybe a double bottom, major trend reversal. Here's one double bottom and strong breakout, and it's trapped bulls. I'm trying to see if I have any examples of traps inside trading ranges, but they can occur in any environment. Bulls, I think, get out below 68 if they're still long. And for the bears, it's not a high probability short. It's a triangle, lower high. The bulls will get out below 68 if it closes near its low. For the bears, it's a swing short. That tail, I think, is too big to take that short, so I would not take that short. Therefore, it's still on the long. But stop for the bulls, it's hard. You don't want to risk all the way to below 65, but that probably is where the bulls need their stop if they do not get out below 60, 68. Trading range day, tested the open, bounced a little bit, Trading range day, tested the open, went below it, closed on the high. Well, it can do the opposite. Instead of rallying, I have several examples of where it tested the open and rallied, but it could also do the opposite. It can test the open and sell off. Here's the open of the day, reversed up, and then sold off and closed at the low of the day. Then finally, it can close right around the open of the day. Tested the open, tried to close on the high, and closed almost exactly at the open. Sold off, bounced off the open, collapsed below the open, and then came back and closed at the open. Same thing, tested the open repeatedly, tried to sell off, got back to the open exactly at the end of the day. Tried to rally off the open, came right back to the open at the end of the day. So you got to be open for anything. A rally, and the day closing on the high, a sell-off, the day closing on the low, or the market simply closing around the open. Still always in long, but I think hard to stay long. And for the bears, it's a low probability short despite the wedge, now 57.61. The bar is big, so the risk is big. The tail on the bottom and all of the reversals in the tight trading range means that the probability is low. So more likely buyers 68 low than sellers. 4 consecutive bear bars, but nobody wants to sell low and nobody wants to sell high. With the 4 bear bars, the odds are there are sellers above and we'll go sideways to down for a second leg, but this late in the day, I'm not willing to sell with a limit order at the high of the prior bar. Are we always in short? Well, the 4 bear bars, we're probably always in short. We don't have much time left to the day. And with the 4 bear bars, the odds of a significant rally are small. So now if we're going to get a big move at the end of the day, it's slightly more likely down, but chances are we're not going to go very far up or down. We might stay around the open of the day. The bulls want to get above the open of the week, and the bears want to get down to the low of last week. Remember, last week was a sell signal on the weekly chart, and we triggered the sell this week by going below last week's low. And then we had reversal week, and now the bears are trying to get back below last week's low to trigger the sell again at the end of the week. Limit order bulls buying 55 low. Limit order trading has been very profitable all day. Stop order bulls, they have a problem because we have 5 bear bars and most bulls will not buy above 73. They'll want a micro double bottom. And bears do not want to sell below anything. Just like the bulls do not want to buy near the top, bears do not want to sell near the bottom. With 5 bear bars, most bulls want a second entry buy, and we might not have time for that. And bears want to sell a pullback. They don't want to sell below 73. They probably want a couple small legs up, so we might run out of time here. If it was early in the day, it would be a buy 55 low and sell 72 high for limit order scalps. But this late in the day, I did not take either one. Bulls are hoping to get back to the open of the week. They're hoping the sell-off is just a big high 2 bull flag, high 155, high 273. And it is. So theoretically, it's an okay swing buy above 73. But obviously, the stop is far below 72. So the risk is big, and with all of the reversals and now 5 consecutive bear bars, the probability is low. So it's not a very good buy. And for the bears, it's a low one short, 73, but the reversal up is too big. Most bears would wait for some kind of a micro double top or second entry short. 50% limit order traders. Whenever the risk is big, a lot of traders place a limit order to buy 50% down. You can see we went just a little bit below 50% where the bull scalpers were able to buy. So it could be like yesterday where the final 3 bars, we ended up having a very big move. We have important resistance above, important support below, and we're right in between both. And therefore, theoretically, if a person were inclined to take risk, he would buy above 76 with a stop for a test of the open of the week and sell below 75. I'm not sure the math is worth it. Is the probability high enough? The risk is big. You're risking about 4 points, and you're hoping to make maybe 8 points, 6 points, 8 points. So you need to be reasonably certain. And with all the reversals today, I'm not sure the probability is high enough to take that trade. Bulls trying to get up to the open of the week. They still might do it. We're still always in long. I don't think we clearly became always in short. And you can argue 5 bear bars here. But I think it's the reversal dominated the day. You can see how difficult it is to make money here unless you're willing to trade with limit orders, buying 74 low, selling 75 high. And I personally do not trade when you have a tight trading range at the end of the day. Rarely I will. For example, I could have bought the 74 low because I thought we were going to test up, but I did not. Pretty boring day, but we've got some useful information. Weekly chart looks like it's going to close with a small bear body. As I said at the start of the day, I don't think it mattered if the body was a bear body, or a bull body. I think what mattered was it was a small bar. And this is the entry bar for the bears. They had 2 legs up, 1 pulled back 2, so low 2 bear flag last week on the weekly chart. A bad looking sell signal bar, just a doji. And this is a terrible looking entry bar for the bears. Now, for me, I think this is a triangle. As soon as you have a tight trading range with 3 pushes one way, it's a triangle. And the bears got the bear breakout attempt below last week's low. 50% of triangle breakouts fail, higher when the bars look like this. And now the bulls are going to try to get a bull breakout above the triangle next week. This week is a buy signal bar for next week. Just like last week, a doji, a bad sell signal bar. This week, a doji, a bad buy signal bar. But we're in a bull trend, and therefore the probability still favors the bulls. The bears need probably another 10 or 15 bars to make it about 50-50 for the bulls and bears. Daily chart, we had a reversal up Wednesday and good entry bar yesterday, but after 5 bear bars, I said that the market might stall after a couple bars, and we may have to go sideways a little bit. And then we have the FOMC meeting on next Wednesday, and that is an important meeting because the Fed is now in the process of changing policy. For the past many, many years, the statements from one meeting to the next were about the same. We're keeping rates low, no prospect of raising rates. And now we have a new Fed governor and a new Fed chairman. And, I keep talking about the bond chart. We're putting in a top in the bond market that will last probably 20 more years. And that means interest rates are going to work higher for the next 20 years. And that will create a problem for the stock market. Here's the monthly bond chart. doesn't go back to the start of all this, which I think was around 1986 or 1987. The market's been going up for 30 years, pretty much my entire trading career. Anyone who's started trading within the past 30 years, which is probably everybody listening to me, has only seen the bond market go up, rates go down, which is good for the stock market. People have money, they need to invest it, and if interest rates are going down and they buy bonds, or if they buy CDs, for example, they're not going to get much of a return. And, so stocks are a better alternative. Anyway, wedge top, 1, 2, 3, nested wedge top, 1, 2, 3, 1, 2, 3, and now we have a strong reversal down on the monthly chart, and now a lower high major trend reversal. We may go sideways, we may get a double top lower high, but I think we're not going back up here probably in your trading career. We have a spike up here, pullback channel, a spike up here, pullback channel. Each of these higher lows is a target over the next 10 years or so. And I'm pretty confident that we'll get down here, certainly within 10 years, maybe within 5 years. $60-minute chart, we had 10 consecutive bull bars. And therefore, anything that we do here is a bull flag. The bears tried to reverse on the open with a micro double top here and here, but we're probably not going to go down very far with 10 bull bars. And therefore, the best the bears would get is sideways. And then we had a bull reversal bar here at the end of the second hour, but 5 or 6 bar tight trading range right below resistance. That red line is the top of that 3-week trading range. This price was resistance, broke above it. The bulls hoped for support, broke below it, and now it's resistance again. So the upside was not going to be great because of the resistance, and the downside was not going to be great because of 10 bull bars. And that left us with sideways, which is what we had today. Yesterday we had a bull trend day, and it started going sideways in the middle of the day. And that sideways trading continued all day. On the open, first bar of the day, a doji bar, and that was warning us that we were continuing what we started a couple hours or midday yesterday. It was telling us that today we'd have a lot of trading range price action. Bar 2, we'd have a failed breakout above yesterday's high, but 5 bars without a bear body, so probably a 50% pullback. Bar 3, an opening reversal up from the moving average and a 50% pullback, but a big tail on top, big bear. Bar 2, limit order market, sellers above, buyers below. Bar 4, a second entry short, failed breakout yesterday's high, but a doji bar, so more limit order trading. And then bar 6, a high 2 buy with 2 or 3, but 2 bear bars, sellers above. Then we have another lower high 8, so a double top lower high 8, but prominent tails and a limit order market. 9, we have a higher low, and a pullback from 7, but another doji. 10, same thing, doji's limit order market. 11 was the first reasonable stop entry trade of the day, and even then it was not high probability because it's in a tight trading range. Then we get the breakout on 12. The bears need follow through, but we're probably going lower. 60-minute moving average target below. And then we got a big bear bar 13 breaking below the trading range. We had a double top yesterday, neckline, break below the double top, but it still looks like a pullback and a bull trend. And we're at support, so it could be a sell vacuum test of support. 11, 12, 13, big enough for a second leg down. 15 could be the low of the day, but most bulls want a second entry buy. They got that on 18. And 19, tail on top, reminder that this is probably not going to be a strong bull trend day, and that we're probably going to go sideways, which we did. 22, double top, 16, but 4 bull bars, buyers below. The bears need a second entry short. They got it on 25. but I thought the best they would get was a trading range, and that 18 was going to be the low of the day. Micro double bottom 28, 29, but tight bear channel, 6-bar tight trading range, not a good buy signal mark, 29 or 30, and therefore we'll probably need a double bottom 30. The bulls tried to reverse up a couple times here, 31, 33, 34. The bears got a micro double top, 35. We're probably going down to the 30 low, but probably not much below. 38, a failed bear breakout, a pullback from the 31 bull breakout. Always in long. We should try to test the open of the day, so that's a reasonable buy. 40, decent bull bar, tail on top like 29, so like 19, and therefore the market is probably not changing into much of a bull trend. We might get up to the open of the week. We broke above a ledge top, so we knew when 38 formed, 70% chance we were going above the ledge. And once we got above the ledge, we knew 70% chance we were going to dip back below the ledge, and therefore bears would look to sell, maybe a second entry short below 46 or 47. The rally from 38 to 42, even though a second leg trap, probably was going to have a pullback instead of a reversal into a bear trend. We had a wedge bull flag down to 56, but a tail on top, so it looks like more sideways. And this was all limit order trading. The bulls had another breakout on 67. We might get up to the open of the week. This might be simply another test of the open of the day. And that bear bar 68, I think the bulls have to get out below 68. It's a double top lower high 46, a big triangle 1, 2, 3, and we have higher lows and a decent bear bar. The bears can sell, but it's a big bar, big tail, so low probability. They have a wedge with 57 and 61. I still think we're going to stay sideways, which we did. We broke below 55 with 5 bear bars, reversed up on 73, but 5 bear bars, we're going to have a hard time going up. And with the reversal up on 73, we're going to have a hard time going down. And that leaves us with sideways. Not a good stop entry day today. If you took every stop, you probably lost 30 points. It just kept reversing. The first stop entry trade that I would consider would be below 11. The best stop entry trade was above 18 and then above 38. Below 25, we have a wedge with 15 and 20 and a second entry short 22, but I think it's a minor reversal. And selling below 35 for a double top 32, minor reversal. And then selling below 46 or 47, second leg trap. First leg up is 31 on some computers and 24 on other computers. It's probably a minor reversal down. And then buying above 56 or 57, probably a scalp. If you bought above 57, you had all of these reversals down. You had to have a stop below 55, and if you did, you made a couple points. And selling below 58, it's a minor reversal, so you're probably trying to get a couple points out of it. Buy the close, sell the close, trading range day. And therefore, by the time you think it's going down and you think it's good, sell the close, it's probably better to start to look to buy. As soon as you see a bull breakout that's looking pretty good, it's usually pretty close to a time to sell, like on 21 or 24, on 42, 50, 67. Some days are just like this. It's really easy to see the strong breakouts up and down, and you think you have to. You think the trading range is ending and a trend is beginning, but 80% of the time it'll reverse. So selling 13 close, 17 close, 27 close, 37 close, 72 close, buying 21, 24, 31, 42, 45, 67. All of those were losing trades. You got to be looking for reversals, and the reversal setups rarely ever look good enough. 18 looked good enough, 38 looked good enough, and that was pretty much it. There were problems with all the other reversals. Anyway, so buy the close, sell the close. If you're a quick 12 close, 13 close, we're getting close to the 60-minute moving average, and therefore selling 14 or selling 17, not as good. If you wanted to buy the reversal up, if you didn't buy with the stop, 20, 21, 22 are buy the close. And it looks like 38 is a good buy signal bar, 40 a decent bull bar, so we're probably going higher. So 40, 41 buy the close. And then we know we're going to test the open of the day. Once we're there, 42, it's not good to be buying there. And that's it for buy or sell the close, unless you were doing the opposite, selling bull closes near the top, buying bear closes near the bottom. And limit orders, everything was limit order. Selling above any bar, selling above any prior high, buying below any bar, buying below any prior low, using wide stops and scaling in. In terms of tradable, the kinds of things that most traders could trade with limit orders, trying to look through here, looking for a relatively easy one. Probably sellers above 14, buyers below 16, but we're probably going down to the 60-minute moving average, not good. Even though we had the bear bar 22, it's 4 bull bars, we should get a second leg up. So probably buyers below 22. In general, traders should not be buying below a bear bar closing on its low. And then let me see if there's anything else that looks easy. Maybe selling above 44 or 42. I thought buying below 43 was not as good as I would have liked. We have 5 bull bars, but a possible second leg trap, buy vacuum test of the open of the day, and that bear bar closing on its low. I think the math is not good enough for most traders to take that buy, 42 low. And then through here, just all, reversals every other bar. Buying below 74. I did not take it, but I thought about taking it. We're at the bottom of a 2-hour trading range, consecutive bull bars. So not a fun day. Lots of, lots and lots of reversals, lots and lots of work. Can you review always in on the QQQ? Actually, the NASDAQ in QQ2, I think, was cleaner because it didn't have tails that are as prominent as this. Here's the QQQ, which is the ETF that mimics the NASDAQ. Anyway, we have a big gap up, bear bar closing on its low, so it's always in short. You could get out above 7 because it's a high 2 at the moving average, but with that many bear bars, we're probably going lower. So it's still always in short. You got to sell again below a bear bar, either below 8 or below 10, and you can get out below. You can get out above 15, but I don't think you have to. If you do, you got to sell below a bear bar. I would not sell below 17, right above the 60-minute moving average. And then we went to always in long here, and you could get out below 25. I don't think you have to. I probably would get out below 30. I can't tell. The numbers are so far below, but 32 or 34 because of the double top. You buy again above 37. I would get out below this bar, 2 legs up, double top here, double top there, trading range, and then buy again. Maybe above this doji, IOI, or maybe above this bull bar. And I don't think it ever clearly went always in short again. Good question. The only days that trouble me are moving average trading range days like today. I try to trade them as trading ranges using 1-minute bars, but I still tend to buy too high and sell too low. Any advice? My best advice is don't trade them. I think it's natural to look for less risk, and the 1-minute chart has less risk, but because of the trading range nature of the day, it's really easy to take a trade and find out a few minutes later that you entered too early. That just happens all the time in trading range days, trading the lower time frame charts. You buy, let's say you buy here. If you use a wide stop, you have to buy more, maybe above here or above here. You got to sit through a lot of bars to get out break even on this trade and with a profit on this trade. Usually, when I'm trading the 1 minute chart on a day like this, I'm using a wide stop, like a 5-point stop, and I'm scaling in. I did it a couple of times today. For example, I think I bought this 1 minute bar. I put a stop somewhere down here, and I bought more. I don't know where I bought. I think as this bar was starting to turn up from below that low, and then I get out break even there on the first and with a profit on the second. So that's just a really common problem in trading range days. You always find yourself, not timing it exactly right. For example, if you buy above this bar, a wedge, 1, 2, 3, is it the low? You don't know. It could be, but we got one more new low. And if you're taking that buy in a tight channel like that, even though it's probably a bear leg in a trading range, I don't think you can put a stop below that bar. You have to use a wide stop, and you have to be willing to scale in lower. The market's trying to bottom for a scalp up, but you're not sure that this is the low. And the same is true with tops. If you're selling below this bar or below that bar for a double top, lower high, we might get a third leg up, 1, pull back 2, pull back 3 or 4. You could get out above that bull bar, but it's also okay to hold short and use a wide stop and sell more below that bar or that bar or this bar or that bar. Another example, double bottom, higher low, higher, so bull trend, we got a double bottom here, a small double bottom here, reasonable buy here. But if you put a stop below, you're just going to keep losing money. I talk about bleeding to death from 1,000 paper cuts, and that's an example of that, where you're trying to minimize risk, so you're buying and putting a stop below the buy signal bar, yet the market keeps hitting your stop, and then a minute later it goes your way. So if you're going to be taking those trades, I would use a wide stop. Now we talk about a couple good limit order trades on the 1 minute chart without scaling in. Yeah, there were a whole bunch today. Pretty much anytime, it's just what I was talking about a moment ago. If you think the market is bottoming, right, this is a reasonable bottom, right? Weak traders are going to put stops there. So if anything, I'm going to be looking to buy there or buy here with a limit order or buy here. The market looks like it's bottoming. Looks like a pullback from this rally, so it looks like a wedge bull flag. So I'm looking to buy below bars with limit orders. And you don't have to scale in. You can buy either at the low or place a limit order to buy 1 point below the low. So if you tried to buy 1 point below this low, you did not get filled until here. I would rather just buy at the low, because you can see most of the new lows are only 2, 3, or 4 ticks below the prior lows. So all of that would be okay. Since the day was always in long after the reversal up, there really were not a lot of shorts that I would be interested in taking. I'm more interested in buying below bars, buying below that, trying to buy below this, not filled, buy below that. 3 pushes down, 1, 2, 3, wedge, bull flag. I did not sell it, but selling above that, or better, selling above this little bear inside bar, betting it's a bad looking buy, and therefore probably more sellers above. That's another thing. If you're near the bottom of anything and you got weak sell signal bars like this doji, you buy that low or you buy that low. Bulls trying to get a reversal, but a pair of bear bars, more likely sellers above this bar. So that would be a possible limit order sell. As I said, I'm sure I took many more buys than sells today, because today was, from this point on, always in long. How can you talk about weekly and monthly goals and how that has changed over the last 30 years? I'm not sure if you're talking about my trading goals or so I'm not sure exactly what the question is. I'll talk about the weekly and monthly goals and how it's changed over the past 30 years. Monthly chart. Now I got to put up the cash index. I started trading probably somewhere in here right before the 87 crash, and I didn't know enough. If I knew enough, if I were trading it now, I'd say, that's a micro double bottom and basically a 50% pullback. This is probably a bear trap. And on the monthly chart, that would be a buy above. And to me, it never went always in short all the way up. Maybe we're starting to transition into a trading range here, so maybe a sell there. When I look at the charts, I've looked at charts going back, over 100 years. The S&P started in I think 1923. The Dow started in the late 1800s, and I've looked at everything, any data that I can find. You find every now and then you'll find old charts from different sources, and you never know if they're real. Somewhere in the course, I have snippets, pieces of charts from different time periods to illustrate a fundamental point, and that is that the charts are no different today from what they were 100 years ago, 50 years ago. And if you take away the dates at the bottom, and you can't tell if it's a 5-minute chart, a monthly chart, and you can't tell if it's a stock or an index, and you cannot tell, when it took place, 1930s or 2018. That's because all charts are reflections of rational human behavior, and rational is rational. It's not going to change. It's traders competing to try to make as much money as they possibly can, and experienced traders 100 years ago, the good ones, had a good sense of how markets operate, and the good ones today have learned the same lessons. They may use different words, but basically, everybody's doing the same thing. So I don't see the markets as any different now from when I started trading 30 years ago. One thing that is very different is I know much more now, and I'm much more comfortable now. It's hard for me to recapture my feelings from 30 years ago, but I used to get so upset. The market's doing something, it can't be doing this, it shouldn't be doing this. I have an indicator that says it should be doing something else, or I just read from this world's greatest expert that the market should be doing something else. And I used to get, if I'd lose 2 trades in a row, 3 trades, or if I get one big trade that wiped out 2 weeks of gains, I couldn't stop thinking about it. I'd worry about it for days later, and trying to, and I had the belief that everyone had that somehow the market must be trying to steal my money, take my money. Rationally, I knew that the market doesn't even know I exist. They don't care about me. And it just took a lot of time to, and took years to really get comfortable with how the market behaves, and how anonymous it all is, how nobody cares, nobody knows you exist, nobody cares. That's part of the beauty of it. It's kind of like invisible. You walk around, you can do whatever you want, you can make money, and you're invisible. Nobody sees you. You just take money from all these different accounts all over the world, and it's not stealing, but there's something cool about it that you can do it, and and you are invisible. So, but anyway, back to the question as far as the charts. If you take the labels off the charts and show me any chart from any major company from 10 years ago, 70 years ago, I would not be able to tell you if it was 10 years ago or 70 years ago, because the charts are all based upon the same rational human behavior, and we have not evolved as a species in the past 100 years. So what was rational then is still rational today, and charts are a reflection of rational decision making. So the charts look the same. So I'm not sure if I'm answering your question, but that's how I view it, that there is no change. Okay, so it's thanking me for showing some setups on the 1 minute charts. Okay, so we have a doji day on the daily chart today, and we have a reversal and a pullback. Odds are we're going higher. So this is a cup and handle pattern, a reversal and then a pullback. You can call it a head and shoulders bottom, shoulder, head, shoulder. Are the odds high that we're going a lot higher? No, but probably 60% chance we're going a little higher. 40% chance we're going a lot higher. From any kind of reversal pattern. Here we have a lower low major trend reversal, higher low major trend reversal. 40% chance of getting a major reversal into an opposite trend. I still have the April high up here. It's 40 points above today's high. Monday's the last day of April. Unlikely that we'll get there. If we get there, that would be a stronger buy signal bar on the monthly chart. Monthly chart right now, prominent tail, top and bottom, only 1 day left, and the high of the month is 40 points above. The open of the month is maybe 30 points below, and therefore we're probably not going to the high on Monday, and we're probably not going to the open, and that means that when the month closes, it'll have a fairly prominent tail on top, and that makes it a weak buy signal bar for May. All right, hope everybody has a good weekend.